Did you know that most of your stop losses, almost 80%, get hit simply because you ignore protected highs and lows? In this video, I'm going to reveal how protected highs and lows actually control the market. Miss this, and you'll keep getting stopped out. Understand it, and you'll finally see where smart money is moving. Let's jump in. So, what is a protected swing? It's simply a high or a low that I expect to hold as the trend continues. In other words, it's the point in the market that tells me, as long as this level isn't broken, the trend is still intact. So what do I mean by that? In a bullish scenario, I'm expecting the most recent low to stay protected. If that low holds, it tells me the trend still has strength to push higher. Now, how do I actually define a protected high, low, or protected swing? Well, there are two types, and this is the first one. In a bullish scenario, I want to see a low or a short-term low get swept or taken out. And then I need to see price close back above the series of down close candles that created that low. That's when I can confirm it as a protected low. So you can see here, this is the low. We identify the series of down close candles that created it. Once price closes above this level, I mark it as a protected low. From this point on, I expect it to hold if the trend is going to continue higher. Now, when do we not need to run out the low? Well, that only happens if we're using SMT, or smart money theory. With SMT, we can identify protected swings without waiting for the low to be taken out first. So in this case, using SMT, the correlated asset has already run out its low, forming a protected low. That tells us we can anticipate this low to hold as well, even without it being taken out first. So in this case, I use the series of down close candles that form the failure swing. Once price closes above that series, I can expect these levels to hold. Now, the other type of protected swing comes from a fair value gap. In the first examples, we looked at highs or lows being swept. Here, price moves into a fair value gap, and I identify the low formed there. Then, I find the series of down close candles that created that low. Once price closes above this level, I anticipate the low will hold if the trend is going to continue higher. So, let's jump into an example. Here, you can see price trending down toward an important level, where we might anticipate the start of a new phase in the market. So, here we have a series of down close candles moving into this important level. Do we close above these candles? No. So the trend is still bearish. Now, we see a sweep of a short-term low, basically taking out a liquidity point. I'll show you what it looks like with a correlated asset using SMT, but let's focus on this one for now. After the low is swept, I identify the low and the series of down close candles that formed it. I mark this level, and once price closes above it, this low becomes protected. That means we can anticipate it to hold if price is going to reverse and continue higher. From here, I can look for an entry or plan for a trend continuation, expecting the market to move higher. Well, let's go over an example on the chart. Here, we're looking at an uptrend where the market is currently in a corrective phase. If you're familiar with price movement phases, you'll notice that based on the highs and lows being formed, price is now moving inside a consolidation phase. During consolidation, it's important to pay close attention to the key highs and lows on the edge of range. And since we are simply in a correction of a higher timeframe uptrend, we should naturally expect price to react from the lows. So, looking at this setup, when price reaches this lowest point, what do we see? It sweeps that low. Here, the market has taken out the previous day's low. Now the question is, do we get a reversal from there? But what actually defines a protected low? Let's assume I was trying to frame a reversal trade from the previous day's low. That's where we see the so-called turtle soup setup come into play. But what happens, and why do I wait for a protected low? Well, we never actually get confirmation through a proper close across the series of up-close candles that formed that low. So, as you can see, the setup simply fails. Now, look at this. Price sweeps the low. What happens here? Do we get a confirmed close through the series of candles that made that low? Yes, we do. So, with that confirmation, we can now anticipate that the trend has flipped bullish. And what does that give us? It creates a protected swing. That means I now expect this low to remain intact because it has been closed through if price is truly going to continue bullish. So, I'm expecting this low to remain intact as price continues trading higher. Now, what do we need if we're looking for a protected swing? We would need a low to be swept out. Why do we look for a low to be swept and not a high? Well, it's because we are bullish. The trend has flipped bullish as long as this low remains intact. So once that low gets swept, what's required to form a protected swing we can trade from? We'd need to see the series of down close candles that swept out that low get closed back above. As price continues, do we get that closure? Yes, right here. Now, with that closure, I'm expecting this low to hold. That gives us a new protected low. And since this is late in the session, I also expect it to hold as we move into the next day. So, here we are in the next day. Price is consolidating, and we see another sweep of the low. Again, for this to form a protected low, we'd need a closure through the down close candles that swept it. And once again, we get that confirmation. So now, I'm expecting this low to remain intact, which allows me to use it as a reference point for continuation. And where would I be targeting? My liquidity points, of course. The key here is to keep tracking those protected swings, because that's where the real opportunities lie. You don't need to catch the exact reversal. You can trade the continuation or even the candles that confirm the trend after the reversal. I hope you found this walkthrough helpful. Protected swings are a very important concept in my trading, and they help define where I anticipate expansion from. When I'm looking for entries, I mainly focus on new invalidations forming, because once a new invalidation or protected swing is confirmed, that gives me a fresh area to trade off of. Thanks for watching, and I'll see you in the next one.